Hey guys, what is going on? Welcome to the video. So the stock market had a major sell this past week, putting the Nasdaq in market crash territory, minus 20% plus, and the S&P very close to market crash territory. So in this video, we'll be going over what to expect next in the week ahead, and going over why there's a very high chance to see at least a market relief rally into next week. We'll also be going over the key levels to watch on the big name stocks, and some stocks that I'm watching for trade ideas. As always, there are timestamps in the description, and let's go ahead and get into it. So last week I didn't make a video and sent out a post explaining the lack of confidence heading into tariff day. It has been a low confidence market over the last few weeks, and it's been needing a capitulation sell in my opinion for a sustained low, which I believe may have started on Friday. Now I'm not going to get into economic or political talk in this video since I'm sure y'all have seen plenty of that, so we'll be taking a look at some important charts and what needs to happen for the market to reverse. First off, taking a look at the VIX, which measures market volatility, and major spikes in this often mark market bottoms. It spiked over 45 on Friday. On August of last year, it spiked up to 65, which marked the bottom of that sell, and March of 2020 was obviously the biggest spike, hitting a high of 85, and that marked the market bottom a couple days later. Now, there's nothing stopping the VIX from a bigger spike next week, but the important thing to note here is we are very likely close to peak uncertainty. The VIX will fall back down in due time, and there will be at least a short-term bottom. The fear and greed index is also notable, with it now sitting at a reading of extreme fear and 4 out of 100, which is an insane reading. We are very close to max fear and uncertainty, which does not mean that stocks will bottom next week, but it does mean there's a very high chance for at least a strong bounce and relief rally. So now taking a look at the S&P, focusing on the bigger picture. On Thursday and Friday of last week, it combined for over a 10% down move, and this is truly an anomaly, and the only comparison on most recent times is the 2020 COVID crash. If we zoom into that crash, we can see that even the largest sells were met with quite a few relief rallies and dips getting bought up. The closest comparison of what we are seeing now was the first 4 days of the crash, which combined for a 10% drop. Even with that being the very beginning of the fear, the next gap down was bought strong and went on to rally over 9% from the gap down lows to the next swing high. Now the market is obviously very uncertain with what happens next with tariffs, etc., but to make myself clear, there's a very high chance that at least a short-term bottom and relief rally will play out next week. I would compare my expectations with what played out during that initial violent sell from the COVID crash. If there is another gap down on Monday, I believe that dip has a great chance to get bought up strong and rally back to the 520s at the absolute minimum, something like this for SPY. Also taking a quick look at the RSI indicator, the S&P is pretty heavily oversold on all notable time frames, including the weekly chart. Since 2011, the S&P has only been oversold on the weekly chart in 3 instances, including 2011, 2020 COVID, and now. So to keep things simple on my thoughts into the week ahead, I would be very confident for a good bounce at the minimum next week. If there is a gap down on Monday, I think it is a strong buy to play the rally back up. I also think that this is a great time to be adding to long-term positions. I would not say that I'm confident in the ultimate bottom being in next week necessarily, as it will almost be fully dependent on what plays out with tariffs, which of course none of us have zero clue what will happen, but this violent of a sell will not continue without at least a large bounce first, and I'm saying that with a good amount of confidence into next week. Alright, so let's take a look at some individual charts now, focusing on the big names first. Likely the biggest tariff loser out of the mega caps is Apple, which is down 15% plus from the last 2 trading days. I'm looking at this chart as for the time being, only one zone matters, and that is 196 to 200. This zone was a triple top from 2023 to early 2024, the breakout point from June of 2024, and the successful backtest as support in July. It broke and closed below this zone on Friday, so whether it reclaims above or not will be a very important tell. Major zones like that tend to be at least back tested after breaking, so I could see something like this playing out even in a larger bear case scenario. Amazon stock is also a big tariff loser, though it showed notable relative strength on Friday with a hold off 166 support and rallied up to fill Thursday's gap. Watch for this strength to continue on a potential market rally, and it makes for one of the most attractive dip buys currently in my opinion, and the market has agreed with that so far based on Friday's price action. Nvidia is another one, and the semiconductor sector as a whole will be very important to watch next week. Tariffs for semiconductors have not been announced yet, though based on other tariff numbers, there's probably a good chance they come in higher than expected. However, based on this price action, the market may have already priced in those higher than expected tariffs, and it will be up to you to ultimately decide your opinion. In order to rally, Nvidia needs to hold the 90.7 to 92 support zone, reclaim back above 97.35, which could then target 101.55, which would be a major decision point if that gets tested. AMD is another important one to note. And semiconductor wise, the chart is more appealing than Nvidia in my opinion, due to it already being heavily discounted, and while Nvidia has more of the look of a stage 4 top, AMD is probably closer to a stage 1 base than not. For AMD, 81.1 to 83.65 is key support below, which has held so far on Friday. 93 to 95.5 is now key resistance above, which was previous lows, and that zone will need to reclaim and hold back above for a sustained bounce and potential reversal. And a smaller cap stock that has continued to show major strength during all of the volatility is Celsius, ticker symbol CELH. It is consolidating right at the top of the 7+ month-long range at 34.75 to 36, and this along with the 200-day moving average, which has successfully held as new support so far after the reclaim above. So if this strength continues, which I would consider being as long as it holds above the 200-day moving average, watch for a break higher on a market relief rally. The next key target levels above would be at 39.4 to 40, and then 43.5. And as I've talked about recently, Robinhood, ticker symbol HOOD, is one of my favorite stocks to accumulate as a long-term hold. Now it's important to note that Robinhood isn't selling products that are affected by tariffs. It is a loser if this market crash extends, as there will be less active trading on the platform, fewer deposits, etc. But once the market does bottom and fully reverse, I think this will be a big time outperformer, though there obviously is increased uncertainty in the short term for now. So on Friday, it broke below the key 35.55 level, though held the 200-day moving average as support after a slight undercut below it. 35.55 will be the key pivot to watch into next week. If it reclaims, it can target a move back to 36.68, and then the gap fill 38.15 and $40 per share above there. If things get uglier, a break and hold below the 200-day moving average can target the 30.67 gap fill next. I would expect it to be a very high beta name moving forward, so expecting it to outperform the market on any rallies, though underperform on any further drops. Obviously, though, I love this story and fundamentals over the long term, and this is a main focus of mine during this market volatility. So that is everything that I'm watching for in the week ahead. Expect big market volatility to continue, though there is a very, very high chance that we see at least a market relief rally into next week. Thank you guys for watching. If for anybody interested in joining the private Discord chat, that is the first link down in the description to my personal trade alerts, nightly watch lists, and any interesting questions you guys have in there. I'll catch you all next time, and good luck in the week ahead. Peace out.